We are here, we are here, we are here on this amazing day. Everyone, this is Cam Jones, FX Daily Analysis, and we are marking up USD, JPY. Let's take a look at what's going on in the market. We are on the monthly time frame. Price action, last candle in the market was the right-hand side. Price action, highest highs. Price action, lower lows. What we're trying to do is identify where price is currently at in the market at the overall of the structure. Midpoint in the middle. So price is above the midpoint, so it's right below second level highs. So price is below price between the midpoint and second level highs. So let's dial in to see what's going on near price action or at price action on the monthly time frame. Okay, so price action on the monthly time frame is a bullish inverted hammer. Market working its way up. Price action is side by side with the second last candle. Wick is side by side, so it's showing some resistance. Could be a double top that's happening in this area. Also, we can see with the second last candle, we do have the incline of the motion. The market is working its way up for the staircase pattern. So market is working way up, and at the top we got a resistance. So it's doing some type of wedge pattern in that area. So we waiting for a pattern to identify itself in the area for it to upside or come back down to the downside. Let's go back below price down this area to see what's going on. Multiple pushes down to this bottom. So let's see if we can read this. This is just a double bottom. So we have one spike down all the way back down to a low. Second spike down all the way back down lowest lows. So these two is connected. So that will be the first leg. Market spiked up multiple times at this high, came back down to the third leg, pushed right back on the fourth. Okay, we did receive a break and retest of that area. So we're gonna see how far this market really pushes up. So we're looking for this market to break this area here to push up further. But if it doesn't, if it runs into resistance, they can come back for a full retest of that market and then push back up further. Okay, if that doesn't happen, and we'll just be identifying overall first, second, third, fourth, retest one, retest two, market keep working its way up, retest three, retest four to reach all the way to the top. Let's walk down the time frames, the weekly time frame to see what's going on. Price action on the weekly time frame is a doji. The last candle is a doji too, so price action is a bearish doji. Second last candle is a bullish doji. Let's read that market and see what's going on in that area. So let's discuss price action, what's going on. Market is in that consolidation from price action to the candles that's to the left-hand side, at least to the third candle. First, second, third candle to the right-hand side is consolidation. And we can see that some type of pattern is trying to form here. So we may be looking for that market to draw that first, second, third, fourth, retest one, retest two. So market will be breaking for the second push. Resistance area here, come back down for the retest. That'll be second. This will be second retest, and the market push up the third time if that happens. Okay, so if the market doesn't break this area of resistance, we have a spike up at this area that pushed up this area as well. Just because this area wasn't high enough, it was a wick touch more than a body to touch. We received a double top here. Okay, so if we draw it out, that's the main area we're paying attention to because we have the first, second, third, and market is really just on it between the third and the fourth. Nothing to identify itself to draw itself out. We don't know if that market's going to drop down for that fourth leg, create that M pattern. Okay, if it does, or retest the bottom and it work its way down further. Okay, if price work its way up for the incline, first, second, third, fourth, retest one. We just did that already. So we're just waiting for a pattern to identify itself. So we look for a bullish candle that's going to engulf the previous candles, or we're going to look for a bearish candle that's going to engulf the bearish candles. If we're looking for a bearish market to engulf the bearish candles, we may want a candle to definitely break this area here, but see if it's going to break this area here. It may take one candle It may take multiple candles. Head down to the daily time frame to see what's going on. Price action, bullish, inverted hammer. So price is trying to break its way up from an area of support, multiple areas of support. So let's draw out what we see and what happened in that market. So we can see that area of consolidation at that resistance, and we can see that area of consolidation at that support. So support we touching multiple times, resistance touching multiple times. We can see the midpoint right in the middle. So we can see that huge consolidation that we in that we identify on the monthly time frame, the weekly time frame. Now we get to see a nice and tight consolidation back, bouncing up and down on the weekly time frame. So now we look at structure in the market. So if we look at the overall structure of this market, we're looking at how many touches down to that support. We did receive once, two, maybe three. Got a fourth one here. It's about 4 pushes down to this bottom here. That's resistance. How many pushes they receive? Let's say 1, 2, maybe 3. Got another 4 to the top, and this fifth one's pushing up. Okay, so we have 4 to the top pushes, 4 to the low. We're going to see if this market's going to push up for that breakout of that area. If it doesn't, then that means that will be the fifth push that it did. And if it drops back down, that exhaustion. The market can come to the midpoint. It may have to come to the overall midpoint. So the overall midpoint would be price action, highest high. So lowest midpoint, market really coming back down to the midpoint from the break and retest that we may have to identify if it does it again for the second time. Okay, so market we may look for market to return right back down to that area. That'd be 5 pushes to the top for full exhaustion. The market could create that momentum in this area to come back up. So let's clear this off. Let's head over to price action, see what's going on a little tighter. So price action is side by side, doing that consolidation. So we do see that first leg, second leg, third leg, fourth leg, retest 1, retest 2, retest. Market's pushing up for that third time. Still got one more to go for exhaustion. Okay, so once it breaks this level here, if we see some red candles coming down, it has one more push to go with green candles. And if it doesn't, if it does more, then that means market is coming off this pattern here, which you see the first, second, third, market push up for that W. So that W, if it's strong enough, it could be creating the next structure for multiple pushes. Okay, but with current prices currently at on that daily time frame, we only looking at one more push left to go, and then it will take maybe a pattern to formation below that last push the market up. 4-hour time frame, price action, bullish, inverted hammer. Okay, so market's working its way up, ran into resistance not once but twice in both areas here and here. We do have that first leg, second leg, third leg. Market pushed up for that fourth retest. Market pushed up for that second time. So we don't know what's going to form here. So it's multiple things that's going to form. If it's first, second, third, fourth, retest 1, it's going to break again, retest 2, and work its way up, retest 3, and so on. Okay, so if that market doesn't break that resistance, and we see a bearish candle that drops down from this area here, or multiple dojis, we'll look for the first, second, third. Market drops down that fourth. Okay, we'll look for the break retest, and the market's working its way back down to the previous area. Headed down to the 3, let's see what's going on. Side by side, price action is a doji. Okay, so market's retesting, so that's a market breaking. Come back to retest previous areas in here. Let's see if we can keep on drawing out as we walk down. So we can see markets coming back down for that retest further. So market's still pushing. Okay, so on the 45 minutes time frame, you're starting to get some side-by-side candles. So market's riding side-by-side consolidating. So it's right on top of the SR line for that support on the 45 minute. Headed down to 30. We still got side-by-side consolidation. So market's still riding side-by-side. So we got a break, double bottom, retest, and the market pushed up. We got a single bottom. Market pushed back down to the breaking areas. Now we're going to identify what's going on. Headed down to the 15-minute time frame, getting some type of structure of a push up. The market came back down, like a little break and retest. So some type of patterns that's trying to form in here in that area. So we can see that first, second, third. The market could be dropping down for that fourth break and retest. That's a bearish inverted hammer. So market's working its way down. We can see that market's trying to break 15-minute, 5-minute, and the 3 minutes the same candle, and now we get additional put that structure for the market. We look for price action to push below the second last candle wick and close out that market down. Okay, guys, this is Cam Jones, FX.